Welcome back. Let's now invite the first corporate on trading hour today, Galaxy Surfactants. Edelweiss says the company witnessed strong price-led growth in FY22. The brokerage now expects easing raw material prices to support the company's margins going forward. To discuss how business has been shaping up and the outlook, we're now joined by the Executive Director and CEO of the company, K.K Natarajan, on the show now. Morning, and thanks so much for joining in. This is Rima here. Now, raw materials have been a big worry for the entire industry now. And you also told us in your earlier interactions with us that it's been impacting margins. Now, have prices softened, and what is the outlook on margins?
Good morning. Thank you for having me on the show. So, yeah, raw material prices have started correcting over the last about 2 months. But then we also know that it has started going up, and then we need to see how it stabilizes. But it's certainly in a much better situation what it was 6 months back. And we do hope that if this sustains, I think the inflation-led impact on the end consumer volumes should start recovering. And that's what we are hoping. And we hope this particular situation of prices coming down continues and sustains.
All right. Good morning, Mr. Natarajan, and thanks for joining us. This is Pavitra. So you're saying that prices have softened a little bit. Of course, we'll have to see sort of at what levels they stabilize. But what kind of margin figures are you working with for, the full year? You had around 12.8% for Q1. Considering the fact that prices have softened, what kind of figures can we expect?
Yeah, see, what we have, there are two aspects to this. One is in terms of how we are able to manage the risk positions in terms of various feedstocks as the prices are coming down. So we do have a very robust risk management framework in place. Keeping this in mind, what we have guided the market is towards our EBITDA target range of 16,000 to 18,000 per metric ton. And we would want to be at the higher end of this band of 18,000 rupees per metric ton. What is also critical is the volumes have to be standing up well. Given the inflationary situation and the sort of demand cutback that most of the industries are talking about, and even our customers are talking about, we need to see as to how that shapes up, because volume degrowth is something that's also going to have an impact in terms of the numbers of EBITDA that we'll be able to deliver.
Okay. Hi, Mr. Natarajan. So in terms of product diversification, I believe that is going to be a priority focus area for you. But given that this kind of curtailment of demand that you mentioned, which is also likely going forward, how are you looking at introducing new products? And the ones that have already been introduced, by when are they likely to start contributing significantly?
Yeah, some of the products that we introduce, typically our product, approval process for any new introductions take almost about anywhere from 15 to 24 months. And some of the products that we introduced, say, almost 2 years back, customers did start introducing into their formulations. But there are some amount of projects that did get postponed because the customers want to be introducing new products, new formulations when the demand situation is robust. Given this uncertainty on the demand side, some of the launches have got pushed. And also in terms of the new products that we introduce and what got a good traction over the last 6 months, we need to see as to how it sustains. Given the volume situation doesn't seem to be too optimistic. At the same time, last year, I think the volume situation was pretty optimistic. With this sort of inventory correction that is happening across the board, we do see that that's something that we need to watch out for. But yes, our product introductions are pretty much, the projects in pipeline are pretty healthy. And we do hope that, the things start turning around for our customers to introduce those products in a very aggressive manner into the market.
Sir, you're sounding very cautious on demand. I think you've used the word volume degrowth, inventory contraction, customers holding back multiple times in this conversation. Can you talk a little bit more about the extent of volume degrowth? By how much have customers, cut down? Perhaps they're spending with you.
Yeah, see, if you look at our first quarter of this financial year numbers, our volumes degrew by almost 7.7%. We grew in India ahead of market at almost 3%. But what degrew significantly was our Africa, Middle East, Turkey volumes by almost 22%. And the rest of the world volumes were about 6%. So this is reflective of what sort of situation that the Africa, Middle East, Turkey countries in that particular region are going through, given the high food inflation and the high interest rates and the currency depreciation significantly, this certainly is something that has already panned out in the last quarter. And we do expect
guidance for FY23, the volume degrowth guidance?
See, what our volume growth guidance has been in the 6 to 8%. Okay, because our objective is to grow ahead of the market. The global demand growth has been anywhere close to 2%, if you look at it. So now, for us to be hitting even the lower end of the 6 to 8% growth, we do expect things should start looking up well, say at the second half of this financial year, and that would enable us to be there at the desired level of at least 6%, which is the lower end of the volume growth that we have guided the market to.
Okay, Mr. Natarajan, you know, in Q1, we also saw the Africa, Middle East region. That was the geography which was worst hit. It was down around 20%. Can you tell us how things are there now? Is it looking slightly better, or, you know, do things continue to be that subdued?
No, we are seeing some green shots, but then it needs to sustain and it needs to start getting back, okay, to the base level in terms of growth. And then from there, we look at the growth happening. So this is certainly something that is not going to turn around in a quarter. Even earlier, when we had a similar situation 3 years back with the Egypt market degrowing significantly, it took almost 6 months to 9 months for things to get back on track, because the consumers need to adjust to the new inflationary situation. And the benign, the sort of correction that we're seeing in the oleochemical prices and the edible oils should augur well in terms of the inflation coming down, and that's supporting our consumer demand in these markets.
And how much does this area contribute to your volumes?
See, Africa, Middle East, Turkey contributes about 26 to 28% of our global volumes.
So can you tell us, after a volume decline of 7.7% in Q1, you would have to grow very fast to report a full year volume growth of even 6%. That means things have to start turning around from the current quarter. How has Q2 been, the first 2 months of Q2, July as well as August?
So what I said was, our objective is to grow ahead of the market. So if the overall global market is going to be degrowing, then obviously we need to see as to whether our growth is in line, okay, with how the global market is panning out. So if you look at it, our desire is to be growing at about 6%, but the external environment needs to be conducive. We do see some, green shots that are visible now. So we are keeping ourselves optimistic in a very cautious way, and we hope that things are turning around. And once things are turning around, we are well positioned to be able to take advantage of the surge in the demand numbers.
So the July-August volume growth for you?
That would be something that I would not like to be talking now, because I think I would like to say that once I'm in the call after we announce the results.
All right, we'll chat with you then. Thank you very much, Mr. Natarajan, for joining in. That's Galaxy Surfactants for you. A bit cautious on the volume front, hopeful that things will turn around. As of now, he's sticking to his earlier guidance of 6 to 8% on the volume growth front, but volumes will be at the lower end of their guidance. But that, again, depends on things turning around for the company externally as well. Get into a break on that note. When we return, we'll discuss market technicals. Mitesh Thakkar of earningswave.com joins in.